Coming up, more on the Federal Reserve. We're going to be returning to our discussion, and this time it's going to be with the Fifth Third Bank Chief Investment Strategist. Stick with us. This is Bloomberg.
Yeah, super impressive. Housing and retail, two of the strong pillars of this recovery. So for more, I want to bring in Fifth Third Bank Chief Investment Strategist Jeff Korzenik. Jeff, thank you so much for joining us. You know, I don't think a lot of people in March and April would have expected retail sales to be a V-shaped recovery like this. I don't think a lot of people would have expected housing to actually boom in the middle of a pandemic. And yet here we are. And we saw it in the Fed's official forecast that, you know, they've brought down their unemployment rate expectation for the end of the year. Just big picture, how surprised are you at the progress that the U.S. economy has already made in digging itself out of the hole?
One of our earlier observations was that we should expect a faster recovery because we entered this downturn without any fundamental economic imbalances. So the sort of long, drawn out, squeezing out those imbalances and the repair from that just didn't have to happen this cycle. That being said, we have to say the resiliency of the U.S. economy has been quite impressive.
Yeah, I mean, and the resiliency, of course, of consumer spending. I mean, those retail sales numbers that we saw, of course, back above those pre-pandemic levels. But I guess the concern then, Jeff, is whether some of that spending was either a pull forward or whether it was just, all of us rushing out and buying, essential items that we needed for the home, and whether that's going to be sustainable enough to keep GDP or get GDP back on track.
It was a combination of factors. The Paycheck Protection Program was helpful. The subsidy to unemployment insurance was incredibly supportive of spending. There's a pent-up demand impact. That's helped looking in the past. I think it's going to get a little bit more difficult. One of our concerns here is that once you look at who is actually unemployed and critically how long they've been unemployed, we're going to flip a switch in here. Long-term unemployment, defined by economists as 27 weeks or longer, is going to start soaring because people who are laid off in March and April, who are not back in the labor market, are suddenly going to be long-term unemployed. And there's some very negative consequences to that.
And it's something we're going to be discussing after this break a little bit later, Jeff, with you about so the inclusion that can be focused on when you look at the labor market. I'm interested in some of what is the Federal Reserve's focus in this new targeting, particularly of inflation and a more average inflation rate being looked at. Do you ever see an overshoot?
I think there's always the potential for an overshoot. It seems so far away now. I think the Fed quite rightly is saying that's a problem we'll address if we need to.
Let's talk about today. We heard the Fed be a little bit more explicit about its strategy here. And they said, we're going to wait for maximum employment. At one point, Chair Powell said, well, do you want to see unemployment get all the way back down to 3.5%? And he said, yes, pretty emphatically. How much will that help the economy? The lack of uncertainty that investors just don't really have to think at all about possible rate hikes for a long time until basically we're there.
I think it's a big positive. That being said, I'm not as confident that the Fed will be able to get to that level. If you look at it, that below 4% unemployment is the exception rather than the rule.
Does it, but Jeff, I mean, the concern here, though, I mean, whether they get to that employment level, whether they get to that inflation level independent of one another is one thing. The idea that they sort of link these two in tandem and that the market is now expecting that any sort of move upward in rates is going to have to be confirmed by both of these things in tandem. Does that give you a little bit of worry about the flexibility that the Fed may or may not have down the road?
I think it's actually a positive. We're basically pretty favorable on this policy. If you look back at what businesses on the ground were doing back in the fall, they were starting to up their investment in capital goods to deal with the limited labor force. They were starting to reach deeper into the labor pool, some of those items towards a more inclusive economy. And that's actually not just a social good, but actually an economic good. If we can grow our labor force participation rate, we can grow our economy faster.
And talking about participation rate, we're going to be discussing much more with you about how we can see perhaps a second chance hiring really helping the outcomes at the moment, looking at felons in particular. But away from the area of that part of the labour market. Just talk to us about how surprised or not you've been about Chair Powell really talking to this inclusive nature in the labour market, looking to ensure that, well, paying lip service to the fact that they see the racial divide that's building in unemployment. They see the gender divide, and they're looking to try and push government that way, but also realise what monetary policy has to do with it.
As you mentioned earlier, Caroline, it was very striking in this press conference, not only in Fed Chair Powell's remarks, but two of the reporters later on asked questions in that arena. Some of this perhaps is defense. Last month, Democrats in the House put forward a piece of legislation, the Federal Reserve Racial and Economic Opportunity Act, that would add this as a third mandate to the Fed. And I think the Fed probably doesn't want to have that constriction on their policy making. But my experience with the business community, the policymaking community, is this is something we all get. And as Americans, we want our country truly to be a land of opportunity across racial boundaries, across other boundaries. And this is something that many of us believe in very, very deeply. And I would say that's part of Fed Powell's operating system as well.
All right, Jeff Korzenik, Fifth Third Bank Chief Investment Strategist. You'll be sticking with us for more on the economic recovery and second chance hiring and, again, building a more inclusive labor market. That discussion continuing next. This is Bloomberg. So I want to go back out to our guest, Jeff Korzenik. He's the Chief Investment Strategist at Fifth Third Bank. Jeff, as Romaine was just saying, one of the really good things that we sort of learned about saw materialize in the late stages of the last expansion is that when the labor market does get tight, we don't see spiraling inflation as some people have feared. We see businesses invest in expanding the workforce, skills training, looking at potential employees that they may not have previously considered. For example, people who had been in prison. How much does that experience help then inform policy now in really sort of rethinking how strong the economy can get before the Fed or before policymakers tap the brakes?
I think it's extraordinarily important, really in two ways. One, the business community simply hadn't had a seat at the table for many of these discussions. And very often people who have been very active in criminal justice policy just don't have experience in the business community and understand their needs. So having the business community step up in that way and be involved in the policy process directly has been critically important in delivering better policy. The other factor is it's simply working. When we find businesses who adopt a model where you are selective about who you hire, find the people who are ready for employment, and then critically provide them tools to stay employed. That might mean access to housing or transportation. You get not just an employee, you actually get an extraordinarily good employee.
You were recently elected to the membership in the Council on Criminal Justice in recognition for the work you've done on this. How do you think policy is developing in this way? Is there an optimism going forward, even if pay service to what Trump has achieved in terms of prison focus and policy? And how will it develop post-November, do you think?
There's a tremendous amount of energy around this. I frankly was pessimistic when unemployment rates went soaring that this would get sidelined, but I'm gratified it has not. As you mentioned, the president has been very active in this. The passage of the First Step Act, which governed outcomes for federal prisoners. Now, federal prisoners are only 7 or 8% of the prison population, but that was extraordinarily important on a symbolic basis. Now it's going at the state and local level. Most of this legislation is at the state level. And I'm seeing a lot of reform movements that are involving business-friendly reforms. So I think that's going to have a positive impact.
And so then, Jeff, with regards to the current recession we're in and the current downturn in the labor market, some of the gains that we have been making with regards to getting some of those types of people back into the workforce, have those gains sort of been interrupted?
They have to some degree, but there's a new angle. I hate to use that word, but there's a new element here that really hadn't been as much part of the discussion. And that's if you look at people with felony convictions in the United States, there are 19 million of them. So it's an enormous population that is underemployed and really could contribute to the economy. It also has distinctive characteristics. And one of the tragedies of our nation right now is that 1 in 3 black men in America has a felony conviction. So that's a tremendous obstacle to economic opportunity. So we can't hope to live up to our aspiration to be the land of opportunity for all until we offer second chance employment. So that's helping drive the initiative right now, and I think that's a big plus.
All right, our thanks to Jeff Korzenik. Great perspective. Really appreciate the sort of real-world look at the ramifications of all of this. Jeff Korzenik, Fifth Third Bank Chief Investment Strategist.